Welcome to Taking Stock. I'm Amanda Lang. Coming up on this show, is Canada headed towards a society without hard cash, and who gets left behind in a digital currency world? And in America and elsewhere, it feels like a particularly fragile and volatile time. So how does Canada fit in? Plus, NATO wants us to spend more on defense, how that might benefit our whole economy. That's all ahead. First, for the week that was in business, it's time for the briefs. Inflation in Canada cooled to 2.7% in June, with a decline in gas prices helping to offset slight increases in inflation for food and services. While the overall picture continues to support lower interest rates, there's some evidence that inflation is stickier than hoped. Meanwhile, consumers and businesses were still feeling gloomy about the outlook for the economy. That's according to Bank of Canada surveys released this week. Financial stress and reduced spending plans were expressed by consumers, while businesses are feeling less optimistic than normal, with lower investment spending planned. Taken with the inflation data, it clears the path for additional rate cuts to help boost the economy. A new federal transit fund will earmark $30 billion over 10 years for projects across the country. The money's on top of $30 billion spent since 2015 on public transit. And while funds won't flow until 2026, projects can apply for the money now. Maybe third time's the charm. Hamilton-based Stelco is being sold to another U.S. firm, Cleveland Cliffs, for $3.4 billion, hoping to do what U.S. Steel couldn't do after it acquired it back in 2007, and after an injection of private equity that included Fairfax Financial saved it from near ruin in 2017. Cleveland Cliffs said it will maintain Stelco's Hamilton headquarters. Broadcaster Chorus said it lost $770 million in the most recent three-month period and warned about its ability to continue operating. It comes after Chorus lost the rights to some profitable channels, including HGTV and Food Network, which Rogers bid away. Chorus said further job cuts of up to a quarter of its staff could be ahead as it scrambles to keep costs in line with falling sales. And those are your business briefs. In a digital world, it's no surprise that paper currency use is dwindling. Here's a look by the numbers. When it comes to payment transactions, debit and credit cards still rule at 33 and 31% of total volume in 2022. Electronic fund transfers is next highest at 13%, and cash is in fourth place at 10% of the total volume. As for value, the big categories are electronic fund transfer at 59% and checks at 28%, no doubt capturing a lot of rent and other recurring bills. And while they dominate for sheer number of times used, credit cards are only used in 6% of the total value of transactions. Cash, meanwhile, is just 0.5% of the total. Our comfort level with new technology is shifting, and our shopping habits are too. Online sales accounted for 6.5% of the total in 2022, up slightly from 2021, and 55% of Canadians made an online purchase sometime in 2022. When it comes to cash, about the same number of transactions, or just over 2 billion, took place in 2022 as in the year before, while the value of those transactions actually rose slightly to $60.1 billion. Compared to 5 years ago, though, cash use dropped 59%, and the value of those transactions fell 41%. Online payment forms, meanwhile, all grew. Debit was up 20% in the 5 years ending in 2022, while electronic fund transfers grew 51% and online transfers were up 314%. And it seems we have mixed feelings about the future of cash. About half of Canadians, or 49%, think retail outlets will be completely cash-free in 10 years, and yet 45% of consumers say they would be uncomfortable if cash were not accepted as an option. The Bank of Canada said this week that a centrally backed digital currency is probably inevitable, given the rate at which cash use in Canada is declining. It led us to ask, what does the future of money look like? John Purther is Director of Research at Payments Canada. Thanks for being with us.
No, thanks for having me.
So we've seen the data here from Payments Canada. The use of cash is in serious decline. Where do you see it going? Do you think consumers and businesses are right and that there will be a lot of so-called cashless businesses in 10 years' time?
There's no doubt that the future of digital payments is here, but Canadians still value the use of cash. And even though we've seen the decline of cash, if I go back the past 5 years, we've seen a 20% decrease in volume, a 4% decrease in value. And even though there's growth in digital payments, cash is still viewed as a reliable widely accepted, safe, and secure payment option, a backup payment option for some, but absolutely one that Canadians do not want to live without.
And that's important because we have seen fear about businesses refusing to take cash. Are those fears overblown?
I would say that, first of all, I think we are a ways from a truly cashless society. At this point, we've seen from our research, 13% have gone completely cashless, but the majority of Canadians have no desire to go cashless. Um, and even though a high percentage, almost 50%, believe that Canadian stores will be completely cashless in the next 10 years, a majority of those have a concern about the prospect of cashless stores. And I think what they really want is choice. They want to have, depending on their situation, the choice to be able to use cash in certain situations, digital channels in another. That's really important, the flexibility to Canadians.
And of course, for the vast majority, John, that is a matter of choice and technology. The group that we worry most about in this part of the conversation are the most vulnerable, and we might call them the unbanked or the underbanked. They don't actually use a financial institution. They're not carrying around a debit card. Are we preparing adequately for a future for that category of person? As we all do get, the central bank is talking about a digital currency. We're headed in this direction. What about those unbanked folks?
Well, let me go to your comment about a digital dollar. I still think we're a ways from that. There's a lot of analysis that still needs to be done. In our research, we found that about a third of Canadians found a digital dollar appealing. About 30% do not. Even if we had a digital dollar, almost 2/3 of Canadians would still use cash, even if a digital dollar was introduced. So I think this idea of providing options and factoring in the underbanked and the unbanked, that's still very important. And I think that what providers are going to offer is going to continue to offer choice, even though innovation in payments is going to continue on for some time.
And of course, I guess I want to ask you, and Payments Canada is right at the center of this, is how you think we're doing compared to other countries in terms of the variety of choice and the efficiency of our networks.
We're always continuing to look at innovations. You know that we're looking at real-time payments. Things like online banking or consumer-driven banking, as it's known in Canada, is something that's going to continue to innovate the marketplace. So I think a lot's happened. Gives a lot of options for consumers, but you'll see over the coming years still a ways to go.
All right, we've got to leave it there, John. It's great to have you with us for this.
Thank you very much for having me.
John Purther is Director of Research at Payments Canada. Coming up, the political instability south of the border and Canada's proximity to what happens next after this.